What is good, YouTube? It is your boy Sam. I am back with another video. I'm bringing you guys these consistent videos, so make sure you subscribe, you like, you share, and you comment, so that way we could improve on this journey and learn from each other. Okay. So in this video, we will be discussing how to look for a stock, right? How do you look for a stock that you want to trade that may be, a good investment for your future? Okay. There's so many different ways to do that. You know the phrase, so many different ways to skin a cat? That is what is so beautiful about trading stocks in the stock market, right? It doesn't matter if you've been trading, for 1 year. It doesn't matter if you've been trading for 50 years. You will always learn every single day on the stock market. For all my real traders out there, you know that is a very true statement. Okay? It doesn't matter if you work on Wall Street or you just picked up your phone and you decided to download Robinhood and you knew nothing about it. Both of you will learn something that day. Okay, so we're gonna get into it. So this is not the in-stone way of looking up companies to trade stocks. A lot of people just don't know where to start. So this is gonna give you an idea. Okay, a lot of the ideas you guys have are really good ideas. You just need someone to tell you that, or you need to hear something similar for you guys to kind of gain that confidence. But I'm telling you right now, whatever you're thinking in your mind is, a good way to look up a stock, just go for it, right? Take what I tell you, take what you hear from other people, make adjustments to it, right? Doesn't matter if that person is a billionaire. You can add a little something to it to make that a little bit better. Don't think just because they're super successful in trading stocks that makes whatever you're thinking invalid. That is not the case, okay? So let's just say you want to do a long-term stock, okay? Just go on your search engine, whether that be, Market Watch, Google, Yahoo Finance, right? I don't mean to limit you. There are so many different search engines out there you can use to look up stocks. And you can start with, let's say, 20. Let's start with 20. And always make sure you write things down, guys, right? Like, your thoughts turn into reality. And we're going to save that for another video, but we're going to focus on just stock for now. But that is a very powerful statement, okay? Your thoughts turn into reality. So whatever it is that you want in life, you can manifest it, and it is not that hard. Okay, you just got to believe, and you just got to execute. So get you a journal. Make sure you write down all your goals, whether that be short-term goals or long-term goals or just stocks that you want to invest in, right? And just kind of revisit those journals or revisit your notes and apply what you learned to whatever you were thinking before to better improve your strategy. Okay, so get a notepad, write down 20 potential stocks that you're interested in investing. You can start off with Google or Yahoo Finance, right? I like Yahoo Finance, right? And you search top 20 stocks for 2026 or 2027 or whatever year it is that you're in. Okay, and that's just going to give you an idea. It doesn't mean you take it and run with it, right? You can write out those 20 stocks that you see. You can read on it, right? You can pull up charts, set your indicators, and look to see what you believe the stock has done and where you believe the stock is going. Now, I mentioned before in previous videos, you can capitalize off of a stock going up and a stock going down. But we're going to keep it really simple. Let's just say you want to find a bearish stock. And I don't mean to limit you guys, right? Like I said, there's different ways to skin a cat. So if you're really interested in capitalizing off a stock going down, we can do that as well. But for the sake of this video, we're going to focus on stocks we believe have potential to go up, okay? With that being said, even if you want to capitalize off the stock going down, you should always see the future of that company, right? Because things don't just go straight up. They need to get leverage. So a stock that's going up is going to dip down, come back up, dip down, come back up, and create higher highs. And a stock that is trending down, which is going to create lower lows, is also going to come back up as well. So what you really want to do is you want to capitalize off of those directions. as opposed to, let's just say a company is going bankrupt and you just want to capitalize off of that company going down. I'm not saying that's a bad strategy either, but you always want to deal with companies that are in good standing and have potential in the future. Okay, so back to the search engine. You search 20 stocks that have news articles on them that say that these are the top best stocks to invest in, you know, the next year or the current year that you're in. And always take that with a grain of salt, okay? Because not all news is real news, and we know this, but that just gives you a start as opposed to just sitting there and thinking of different companies, okay? You can also look to see and read up on the companies and see what catches your interest, I should say, right? Because you also want to have a personal connection with this company, and you don't have to, but investing in something you're interested in is a lot easier to follow than investing in something that you're not interested in. Okay? The goal is not to feel like you're at work. The goal is to feel like you are having fun, but at the same time, you know, you can still reap the benefits as if you were at work, right? It's just kind of like a job, right? You don't want to be working a job that you don't like. It's better to work a job that you like, the way it doesn't feel like a job. It's the same with these companies. If it's something that goes against how you feel, how you think, you should probably stay away from it. I'm not saying that it's bad, but just overall, you want to stick with something that you like, okay? So, a lot of companies have what you call earnings reports as well. Okay, so after you've done your news, you see what the CEO or what the company or what other analyzers or analysts, I should say, predict where the stock is going to go, how that company is doing. Okay, you can look to see when their earnings reports are, because earnings reports, think of earnings reports as report cards, right? Remember when you were in school, that report card came out and said how you're performing in school, so you're performing good or bad, and then you probably got that beating from your mom and your dad. Yeah, that report card. Companies operate in a similar manner, right? They are required to have quarterly reports, and you can Google these quarterly reports to see when it's going to happen, right? With that being said, based off of how you believe the company was performing, right, you can either invest in it prior to earnings report coming out. I'm not necessarily saying I'm recommending this. I'm just saying that is a higher risk, higher reward option that you have, although, you know, you can take a pretty big hit on that as well, right? So if you believe that company was doing well, not just based off your emotions, but you've done research, you followed their sales, they've met the marks that they said that they were going to set, right? So you can have more confidence that good news is going to come out, they're going to meet their mark, and they are going to become bullish. Or, smarter thing to do, but lower reward, is you wait until after the earnings report comes out. If it's good news and they've met their mark, and you see that different institutions and retail investors are rallying up that company, that is when you get on the bandwagon after you have gotten confirmation, right? And you set your limits as well based off of different patterns, how that stock trades, different indicators, support lines, and resistance lines, and you follow that trend up, and also make sure you capitalize off of that as well. That is more so something that I would do as opposed to getting in and being greedy, right, on something I don't know what the news is going to be, right? Like, okay, just because a company did well doesn't mean they met their mark. That is very important, because we're going to use the word bandwagon a lot, and unfortunately, or fortunately, if you know how to use it towards your advantage, right, everyone just follows the crowd. Let me give you an example. Apple, okay, just for educational purposes. Let's say Apple predicts that they will sell 16 million iPhones the first quarter of the year. Okay? Now let's say they missed that mark by, I don't know, a million, right? So 15 million. Let's say their target was 15 million and they sold 14 million iPhones for the year, or for that quarter, I should say. That is still pretty good. But you know what's going to happen? That stock is more than likely, and not always, because sales are not the only thing that you should be looking at and that other retail traders look at as well. So just keep that in mind. However, if they don't meet their mark, there is a likely probability that the stock is going to plummet, okay, just off of that news. However, overall, if this is a huge company accomplishment, it's going to take a dip, but you can also understand or consider the fact that it might use that temporary bad news as a dip to where it gains leverage to get a higher high, and you put in some orders and you ride the wave up and follow that bandwagon. Okay, that is also a good strategy. Okay, so I gave you guys some gems, right? So you look up the companies, see what news is happening, right? So like, let's just say you're a Tesla person. They're talking about robo-taxis, they're talking about autonomous driving, they're setting dates and goals, and there's a lot planned for the future. It's revolutionary. There's a lot of potential there, okay? Some of it could also be hype, so be wary, but just understand that. Now, quarterly reports as well, okay? How are the quarterly earnings? Did they meet the mark that they said they were going to reach? Things of that nature. Also, where is the stock trading relative to how it's been trading, let's say long term, in the past year or in the past 5 years? These things matter. So these are things that you need to pay attention to and say, okay, overall big picture, yes, the stock is down for, let's say, the past month or the past 3 months, but maybe it's creating a higher high to where it needs to retract, it needs to gain leverage to go to that next level. And that is also where you'll pay attention and you'll apply your support resistance lines as well as indicators. So that is definitely something to keep in mind. What else? Patterns are huge. Okay? There are different types of patterns when it comes to trading. This video could be 5 hours long if we discuss every pattern that there is. So it's very important to take a pause, write down different patterns or different trading patterns, and so you could have a better idea of what things to look at. So in real time, you can make those decisions and have a good prediction of where that stock is going to go. All right. That's how you search up stocks. I highly recommend you have watch lists as well, right? So create watch lists. You can create them for, you can create different watch lists for different things. Okay. Just because the stock is good for trading long term doesn't mean it's good for trading short term. But you may not want to just limit yourself to long term trading, short term trading, right? You might want to keep your options open, and so you create watch lists for different things. Okay, and that goes for my day traders and swing traders as well, right? For those of you that don't know, day traders are usually traders who buy and sell the same stock within that day. And swing traders or traders who buy and sell stock over, let's say, a week or two's time frame. Okay, that's what we call swing trading. Thanks for tuning in. Make sure you like, comment, subscribe, and share this video, and I'll see you on the next one.